Yo, what's up, guys? It's Maddox here. I just want to make a quick little video because I've been getting questions on my strategy or how do I trade? What's my confirmations? What's my confirmation signals to enter a trade? So I'm gonna make a quick video explaining exactly that to you guys and my thought process of how I take my trades. Even if you don't want to use a specific strategy, it's important to understand the concepts and confluences for you to take into consideration while you're trading. Because you never know, it might present itself, and you might be trying to trade another strategy when this kind of strategy pops up. But really use your listening ears. Don't just watch the video. Take notes, and yeah. So basically, this is my base strategy. Don't worry about this picture right now. But base strategy. This is what I kind of look for in a trade. I look for, oh, this is kind of perfect. I look for a liquidity sweep. If you don't know what a liquidity sweep, if you don't know what any of these terms are that I'm explaining in the video while I am, do your research, look up a quick video, get familiar with it. So liquidity sweep, this is the first confluence I'm really looking for. Preferably, it could be on any time frame, but found a liquidity sweep. Next thing we're looking for is a inverse fair value gap reversal. So we got a liquidity sweep. Anytime you have a liquidity sweep before an inverse, there's high probability that it's going to continue. If you just get a random inverse, inside of a chop, or where there's no liquidity being swept or taken out, it's high probability that it's not going to actually work out or be, a good inverse. It might just reverse on you. It might be a fake out. But here we have a good inverse fair value gap because we swept liquidity right before it. And then next confluence I look for, change of character, break of structure, whatever you want to call it. We get that. Let me delete these so it doesn't confuse you guys. We get that right here. A break of structure is when price changes it changes its character and direction, which basically happens here. As you can see, we did not make another lower high. We made a higher high over here by breaking this high. And then we ended up going up to take out this liquidity here. The next confluence I look for in this setup is a good draw on liquidity. Now this is a decent draw on liquidity. It's just regular, a regular liquidity pool sitting up here waiting to be taken out. We'll talk about draws on liquidity in a second. But a good draw on liquidity might let's say maybe a 4-hour fair value gap or a 1-hour fair value gap, or something like that to target. Or if you have a double tap liquidity, these are really strong. Let's say there was another wick right next to this one, or equal highs. Those are very strong liquidity pools to drag to. And price did exactly what we wanted it to here. We swept liquidity, inverse fair value gap, break of structure. You could have freaking, you don't necessarily have to wait for the break of structure for to enter, because if you waited for that, it's safer. It's definitely safer. But if you waited for that, let's say you would have got a few points. It wouldn't be a crazy trade, but it's still OW, and you could have obviously taken it higher. Could have trailed your stop until it got here or something. But you can always enter off the inverse if it's strong, like this one, like this thick candle. It just drove all the way through. It's high probability. You could have entered off that. Boom, catch this long. And then once we sweep liquidity again, move your stop to break even. It's very important to risk management, guys. You must be managing your risk, because even your strategy could be so good, and if you're not managing your risk, you're still gonna lose. So yeah, that being said, no strategy is 100% win rate. Learn to be patient and keep testing it. This is the one I take 90% of the time, and it's super basic ICT concepts, and it's just what I do every time, and that it works. But back to this picture down here, guys may be wondering what is this? This is a more kind of technical setup. This is a very good setup that I like to use sometimes if it presents itself. Also, one more thing, time frames. if you see this kind of setup on the 1 minute, okay, cool. 5 minute is the best. Okay, where the heck did we just go? We just went somewhere random. But the 5 minute, for me personally, is one of the best time frames to mark out your confluences because it's extra confirmation. The 1 minute could fake you out sometimes with a fair value gap or something that you didn't see. Or you're in a fair value gap on the 5 minute, but you're trying to trade the 1 minute and you think it's going to keep going, but it ends up respecting the fair value gap. Things like that. You got to make sure you're looking at different time frames. Even the 15 minute. Trading on these time frames, you'll be in the trade longer, but they're higher confirmation, and they'll do you right. So with this one, this is I kind of explained it in this picture, but I'm going to explain low resistance liquidity for you guys. This is important as well. Low resistance liquidity is literally in the name. It's low resistance. So price is most likely going to come down and take out all that low resistance liquidity because it's low resistance. And you must be wondering, why is it low resistance? Because you see all these lows that it's making on the way up. Those are liquidity pools that need to be taken out. And as a collective, they create a strong pullback because there's a lot of liquidity that needs to be taken out. Market will sometimes leave this liquidity for a while and then come back and take it later. But it always needs to come back and take out liquidity. And that's exactly what it did here in this picture. At the top, as you can see, we got liquidity sweep. I believe this might be on this looks like the 1 minute time frame. We got a liquidity sweep. We got a fair value gap here coming down to the downside. We got a midpoint rejection. This is also important about fair value gaps. Enable that middle line setting, because once you get a midpoint rejection like this, we closed at the midpoint, immediately got rejection on the next candle that opened in the midpoint. That is called consequent encroachment, or you could just call it midpoint rejection. But this is, especially when it rejects off the midpoint, it's a good sign of reversal. So we took that, boom. We had a fair value gap here. We inversed it. It's kind of a weak inverse, but we still took it. Bearish break of structure. This is almost similar to the last model I just showed you guys. We're just adding a couple more things. Midpoint rejection, inverse fair value gap. This is like an A+ setup. We got to break a structure, enter off that, and we have low resistance liquidity to target. So target that low, and bang, it hit. After all confluences, target LRL. Literally what I just said. You guys can take a screenshot of this. This is a great setup. This isn't rare, but if you catch it, this is a great trade to take. And it doesn't have to have all these confluences. These are just things you guys can take into consideration when taking your trades. All these confluences, all these confirmations are things you guys can take into consideration. I believe I wrote a list. Oh yeah, identifying previous day highs, previous day lows are also very important, because you may take out a previous day high and not even notice and think it's going to keep climbing, when most of the time you take out a previous day high, you're going to draw back down. So make sure you do that when you're setting up, and back test this strategy. Do what you have to do to get on page with these confluences, because these are really good. These are basic ICT concepts that are just turned into a model that you can use every day. You can even mix and match this model. Doesn't have to be perfect. You guys do what works for you. Do what works in your everyday trading session. If you don't see a setup present itself, don't trade. It's that simple. But I know self-control is hard. It took me a while to gain that self-control in the market. So, yeah, I hope you guys are taking notes. This stuff works. I'll use it live sometimes. But yeah, I hope you guys learned something new in this video. If you have any questions about this, please shoot me a DM, or yeah, whatever you guys need to do. All right, see you guys.